I know a lot of people look at the volatility of the VIX. That tracks the S&P 500. I know you're watching the VXN, which tracks the volatility of the QQQ or the NASDAQ. What are you seeing there, and what action are you seeing in the options market in response?
Sure. Well, both of them popped yesterday, Frank. Like you said, the VIX and the VXN both went to the upside pretty strong, but both pulled back pretty substantially. I mean, for instance, the VXN was up about 17%, but pulled back to a gain of just 5%. So that kind of told you that things weren't quite as bad after that initial pop in volatility and that 600-point sell-off. People started nibbling back in, and that's why the VIX started to head to the downside. Now, the VIX itself for the S&P 500, as you said, made a bigger move, made about a 27% pop to the upside, but finished with a gain of less than 6%. So both of these two metrics that sometimes we call them fear gauges or whatever, both of them surged and then made pretty dramatic sell-offs in the VIX, that is. In other words, the fear went down as the day got longer. That was a good sign. And I think people perhaps this morning that were buying yesterday are the ones that are sort of feasting on that fear today, Frank.
Yeah, a lot of fear there in the market, John. One other thing I know you're watching is industrials. You're actually tracking the XLI. It actually crashed through its 200-day moving average, kind of a technical indicator there. What are you seeing there, and how are you playing that?
Well, yeah, that ETF, the XLI, for the industrials, one of the spiders, I guess there are, what, 8 or 10 of them. This one had been up around 105 just a week ago, Frank, $105 per share, and crashed all the way down to about $100 per exchange-traded fund. And then they started coming in buying upside calls on that ETF. When they're doing that, that's telling us, and they picked almost exactly the 200-day moving average. The 102s was what they were buying yesterday. So they're saying that between yesterday and the end of the year, December 31st, because those were the calls they were buying, they think that perhaps the XLI climbs back. And again, just like with the VIX, the people that believed in that yesterday are making some money today already, Frank.
So I know you got a segment called Unusual Activity, but you're also citing some interesting activity when it comes to travel stocks, specifically cruise ships and airlines. What's so interesting about it to you? Obviously, a lot of volatility there as well with the Omicron concerns.
Exactly. And Frank, when you have people concerned about Omicron, people seeing all the lines in New York City for tests, and you just described how the Biden administration is going to be making, what, 500 million free tests available. Prior to that, the cruise stocks yesterday, they were down about 3 to 6% initially yesterday. And they climbed very quickly out of that hole, and most of them were positive on the day. Now, you rarely see a turnaround that big in a given segment of the market. So to us, that said that people were perhaps anticipating some sort of news. We both know that we haven't really seen the hospitalizations and mortality out of Omicron. And we're obviously hoping that we don't ever see hospitalizations and deaths out of Omicron like we've seen in some of the other variants. But the fact that these cruise lines turned it around so fast, that tells you that people's comfort getting back onto cruise ships is something that we want to pay attention to.